Good morning, traders, and welcome to the live stream. My name is Charles. I come from a community called Piratetraders where we are focused on the ES, the NQ, and how they move through the two-way auction process. Appreciate y'all joining me this morning. If you were watching from the YouTube, you can say hello in the comments of the YouTube channel. If you are watching from the Discord, from Bookmap's Discord, you can go into the tab that says Future/Charles and leave your comments there. Duzman just said it. Good morning to you, Duzman. Okay, well, let's jump right into the chart and let's talk about what's happening in the market. Those of you that don't know who I am or how I approach markets, I am mainly focused on the ES. The ES is the instrument that I trade. It is the thing that I watch all day, every day, and am focused on, and where I have my expertise. I look at the market as an auction process, which is kind of a slightly different way of looking at the market than most people do. The idea of looking at the market as an auction process is I want to recognize where changes take place in the market, where one thing is happening right now, whatever that may be. Maybe the market's going up or down or sideways, but suddenly something changes. And it's not going to keep going up. It's going to turn around and start going down, or it's not going to keep going sideways. It's going to break out to the upside or downside, right? Recognizing where those changes take place gives you an edge as a trader. You may not be the first person to enter whatever the new thing is the market is doing. You may not catch the high tick or the low tick of the day, but you can be one of the first to get in what will be the next major move. And you can think about this on any time frame you want to think about it. If you're a scalper, you could look at the market in a 5-minute time frame and look for changes in the auction process on a 5-minute basis. You can also look at it on a monthly basis, right? You can zoom all the way out and you can say what's going to happen over the next few months based on what's been happening with the auction process. And one trick that is very, very helpful, I recommend all of you do this every single day before you sit down to start trading, is what Jim Dalton calls the top-down approach. So that is, you start by looking at the market on the widest time frame and understanding where you are in the auction process for that, giving you some clues as to what might come next, and then you work your way lower. Today, we are opening at a great place to talk about this auction process over a slightly longer term basis, sort of a swing trading basis. So let's start with that. Okay. I'm going to start today looking at the monthly candles just to see, bigger picture over a period of years, what is the market doing? And it has run out of steam to the upside. We had a lot of momentum up. Hold on one second. Let me just get rid of this. Okay. We had a lot of momentum up basically from July of 2024. The market has been moving up and up and up and up and up. Okay. A lot of momentum. That momentum slowed down and the market spent a couple of months going sideways. And now we've begun to do what we call a trend down on the monthly time frame, where we are actually going down, not up. Okay. So the market was going up, then it went sideways, then it started going down. Okay. So that just tells us that we should be cautious if we're getting bullish on a weekly time frame or on a daily time frame, right? Doesn't mean the market can't go up, over the weeks ahead. It just means, remember, bigger picture, the momentum is still down. So if the market starts going up, it's probably going up looking for sellers to smack it right back down. Okay. So now let's zoom in a little bit and we'll take a look at the weekly time frame. Well, this is where things are starting to get interesting, because last week, by the end of the week, by the very close on Friday, by the very last day of the week, we had made a higher high and a higher low on the weekly. So that again means on the weekly time frame, the momentum to the downside is over. Now that could lead to one of two things. It could either lead to several weeks of sideways down here at lower prices, or it could lead to a bounce in price going up. It could start momentum up. Okay. Then let's zoom in and let's take a look at the daily. So the daily, we can see that we were balancing inside a range last week. Multiple days, we were bouncing inside this range. We were going sideways. So what happens this morning? This morning, with the move that we made over the weekend, we are trying to break out of this balance area that we created last week. And this is what I think is really important. This is where all my focus is going to be this morning, because not only is it going to present excellent opportunities for day trades today, it is also going to present opportunities for swing trades over the next week. Okay, maybe 2 weeks, based on what happens this morning. So now let's dive in to the market profile chart and get some more specific levels that we can look at to kind of understand the context of this. Okay, so I'm just going to cover up my Bookmap just for a second so that I can zoom this out a little bit. Okay, so this is last week's balance area. Basically, this range right here is where the market was balancing. It was balancing in a form that I call balance by pin, which is just a certain type of mechanical behavior, the way the market balances. To me, this move in the overnight does not look like the market is pinned anymore. This looks like a natural breakaway, breakout of balance. That is very bullish to see. If the market was being artificially held in place for the options expiry, the fact that all those options expired on Friday means the market is no longer being artificially held in place and it can actually make a move. So that's the first thing, the behavior of the market changing in this overnight to create a more natural move to the upside. Okay. What else does this present us with? Excellent opportunities to understand what comes next. So we are opening this morning with a very large gap up. What does that tell us? First off, the market is going to try to fill the gap, right? Because overnight inventory is net long. You know, the most likely thing is that people are going to short the market this morning within the first half an hour or so, trying to get back down to yesterday's range, trying to get back down to Friday's range. Okay. So that tells us the gap tells us that there's a likelihood that we will at least try to fill the gap. The size of the gap makes it less likely that we will. The market does often fill gaps the same day that it creates them, but the one exception is when they are large gaps, they have less likelihood of being filled. So we know the market is likely to try to fill the gap, but it is probably not going to succeed. So that's the first thing we're thinking about. Then we're looking at this balance area high from last week. This is the area right in here that should now become support. Okay, so all last week when the market tried to get up here, resistance smacked us down. Tried to get up again, resistance smacked us down. Tried to get up again, resistance smacked us down. Okay, resistance continued to push the market down right here around this 57.55 area. So if today the market can take that resistance and turn it into support, so let's say the market opens, it makes a little move to the upside, it comes back down, it's trying to fill that gap. You got all these shorts entering the market to fill the gap to the downside, and it can't get to that gap fill, which would be 57.23, Friday's high. If it can't get to that gap fill and it finds support here, that is a major, major signal from the market. That is telling us intraday, the market is likely to turn around and head back up to whatever is the high at that point. So that is a trade that is tradable intraday. Okay. Once you see the support, you go long using whatever is the low of the day as your stop and whatever is the high of the day as your target for a short-term day trade. Okay. That's an excellent opportunity. And you could hold that one to see when you get cessation of the trend, to see when the momentum runs out. It also offers us an opportunity for a swing trade, one way or the other. If the market pulls back down around, 57.55 and it doesn't find support there and it starts to drift into this previous balance area, well, that significantly increases the odds it's going to fill the gap and even rotate all the way to the opposite end of balance. So you don't need to feel a need to short right away for a gap fill, because the more likely thing is they won't fill the gap. It's a large gap. It likely won't fill. So you don't need to be in a gap fill trade. You feel no pressure. Now, if we get back to the balance area high and they can't turn that into support, then the gap fill trade becomes a good high probability again for a day trade. Okay. But you could monitor for continuation, because if that happens, if the market comes back for Friday's high at 57.23, it means we are not breaking out of balance, which means we're probably heading all the way down for Friday's low. Not necessarily today, but in the days ahead. So from a swing trade basis, if this area around 57.55 can hold as support, it means the market is likely to make a very large move to the upside in the days ahead. If it cannot hold as support, it means the market is likely to make a very big pullback in the days ahead. That's fucking awesome, right? That's very, very exciting that the market is making it easy on us for once. Yay, the market is making it easy. Okay? That is a great opportunity. So what's the catch? Charles, there's always a catch. There's always something tricky with your analysis. What is the tricky thing today? Well, they're not going to make it feel easy in the moment. They are probably first going to make it feel like the market is going to break higher, and they're going to get a bunch of FOMO longs to chase to the upside. Then they're going to liquidate, and they're going to make it look like the market is crashing lower. And then they're going to grind and probably spend 2 hours just grinding right around this 57.55 area. Maybe down towards, the 40s, up towards the 70s, but just kind of up and down and up and down and up and down. And they will probably drive you mad before they get that bigger break one direction or another. Don't let yourself get shaken out by these types of moves. The opportunity is crystal clear. Either they turn the previous balance area high into support and we make a big move to the upside, or they fail and we make a big move to the downside, both intraday today and in the week ahead. Okay? So just don't get shaken out. Don't force your way into a trade too soon. Don't use a stop that's too tight. Don't constantly change your mind back and forth when it's grinding right on that balance area high. If you can stay in control of your emotions, if you can time your trades where you are being patient with your entries, you're giving your stop enough breathing room for the trade to work, and you're being patient in taking profits, hours later, there's a lot of great opportunity in the market this morning. Okay. So I'm pretty excited. It's rare that the market makes it this easy on us, and it's doing this morning. Large gap, likely to not fill the same day. Balance area high, likely to become support. If that happens, it's bullish. Okay. Any questions on any of that from the chat? I'm talking about a breakout from the balance. Breakout. Wow. Good morning to Trader in the Discord and Steven. Doesman in the Discord says your TPO shows the support nicely. Yes, sir. That's why we use the TPOs. That's the advantage. Being able to see where the market stopped being able to spend time and where it brought in volume shows us what is likely to become support when it comes back down, because that's just how the market works. Resistance becomes support. So that's what the TPOs are for. They give us that insight. Then we can watch Bookmap live in real time to see, is liquidity stepping in at that support? When these powers combined, you have profitable day trading. Good morning to Jay. He says, good morning to the Pirates. Thank God it's Monday and the casino is open. Kiwi is here. Good morning. He says, can we take a look at Bitcoin as well? Bitcoin. Sure. Oh boy. No, I don't like Bitcoin. I don't think it's buyable yet. So you guys can see on the chart, I have this, multiple different levels marked here. Both of these are potential resistance levels to smack Bitcoin back down. Okay. The first is this trend line from the highs. You can see we'll be interacting with that, somewhere between 88 and 90. That trend line could smack the market right back down, all the way back down below 76. Okay. So boop, boop, like that. And then also this, we just talked about balance, right? We just talked about turning support into resistance or resistance into support. This was a balance area for a very long time for Bitcoin. Look what happened the last times we tried to re-enter that balance area. The market got smacked right back down twice, smacked right in the mouth. So if I was thinking about Bitcoin, which I don't day trade because it's just too hard, it's too fucking crazy to day trade. If I'm swing trading Bitcoin, if I'm holding Bitcoin right now, I'm watching for resistance at one of these two levels and looking to take profits if we get it. If I'm flat, I would be looking for shorts at those levels. Again, if we get resistance, because either one of those could cause the market to have a larger pullback this time around than the previous. Okay. But if the market is able to get back up above 92,000 and find support up there, I would be very bullish for a move back up to all-time highs. So you say to me, well, Charles, if the market's going to go back to all-time highs, don't I want to be buying at 87,000 a coin, not at, 93 or 94,000 a coin? To the way I look at markets, no, you'd rather buy at 93, 94 than 87, because right now at this moment, the higher probability is resistance and the market moves lower. Why do you want to buy down here if you might get a chance to buy down here later on, right? So it would be better to wait for it to work its way through the resistance and prove it's going up to buy for that move to all-time highs. And until you see that it works its way through the resistance is always more likely to hold. Okay. So that's the way I see the Bitcoin. I don't see it as buyable just yet. Not for a swing trade. Good morning to some. He says, I trade only the ES. Can you share your iceberg and volume dot settings, please? I'm happy to share my settings. I don't necessarily think there's anything special about them. As a matter of fact, they may even be the default settings right now. Here you go. So this is the icebergs. Go ahead and take you a screen grab real quick. And then I will show you the stops right here. Take you a screen grab. Do it now. Do it quick. Okay, bye. WSS says, I've been a subscriber to Piratetraders for over 2 years. It's well worth the money and time. Well, thank you. Thank you for the plug, WSS. Appreciate you, brother. Yes, if you have not seen at the top of the screen, there is a banner that says, if you want to watch Charles live stream like this every day, you just got to pay $20 a month to join the Piratetraders Brigade. We would love to have you. I cover the ES and the NQ every morning, just like I just did for you. You've already got your game plan. You know what you're watching for. You know you're not going to FOMO into longs or shorts right away when the opening bell rings, because the first move they make is going to be a fake out, probably. All right. You know that there is a very high probability that at some point they're going to try to fill the gap. They're going to try to get back to yesterday's high at 57.23. You also know if they can turn 57.55 into support, then they will not be filling that gap. So that tells you you can be looking for longs at 57.55 if you have support and monitoring for continuation higher from there. And if you don't, you can be looking for shorts to fill that gap. Okay. So just from there to the overnight high on the long side, that's a 40-point move. Okay. Just from there to the gap fill, that's a 30-point move. Okay. So I'm not great at math. Let me see if I got a calculator here. If we're trading one ES contract, which represents $50 for each point, and we get a 30-point move to a gap fill, we can make $1,500 today. The membership costs $20 a month. So let's divide that. Again, we're not great at math. So you could pay for 75 months with just one gap fill today from 57.55 to 57.23. Let's divide that by 12 one more time, just so we know in years. Okay, so you can pay for the next 6 years of your brigade membership if we don't get support at 57.55 today. If we do get support and you get that 40-point move to the upside, you can pay for your next 7 years of brigade memberships. So you might think about joining, because I'm literally talking about these things every single day. The demo trader in the house, good morning to you. He says, consider joining the Bookmap Academy. I would actually second that. So if you guys don't know what the Bookmap Academy is, you basically sign up for it. You go in there and you upload images of your charts and you walk people through the trades that you're taking. And you say, I'm entering long at this level for this reason. I'm putting my stop here. I'm putting my take profit there. And then professional traders will go in and they will analyze your trades for you completely for free and offer you insights for adjustments that you could make to improve your trading. So, Bookmap makes that available for free. Why not? It's like having a coach that you can work with one-on-one to help you improve your trade setups every step of the way. And it's free. It costs nothing. Crazy. And there's a link in the comments there. Jad's in the house. Good morning to you. SC is here. Andrew says, do you measure a gap from the top of the previous cash range to the low of the current day cash open? Yes, I do. So in case people are confused by cash and what that means. So the regular trading hours, I measure those as being from 9:30 a.m. New York time to 4 p.m., which is just when the stock market is open. So that's what I call the regular trading hours. The overnight range is from 4 p.m. to 9:30 the next morning. Okay. So that's how I differentiate the two. You can see them on the chart. The regular trading hours is the sort of purplish one, pink and purple. And the overnight is the light blue and white ones. So that's how I differentiate those two. So the gap, as far as I am concerned, some people use the closing price, the price at 4 p.m. I do not. I use the high of the previous day's range. So the high on Friday was at 57.23. To me, if the market gets to 57.23, the gap is filled. Now, coincidentally, the closing price is right next to it, so they would probably also get to the closing price. But some days, those may be way different from each other. The closing price for the day may be all the way down here. And the reason that I use the high of the day is because that is where the highest probability of success exists. If you target the closing price, the probability that the trade will work is significantly less. And so I care about the better chance I make money than making more money, right? So if we did not find support at 57.55 and the market started to trade lower and I'm looking to sell resistance, my target would be 57.23, not 57.15, right? Because the odds the trade would work would be much higher and I'll be able to lock in those profits. Now, we will probably get into the previous day's range and keep going because of the balance area, but purely in terms of a gap fill, it's the previous day's high that has the highest probability that you'll get there. And then also the highest probability that if the market is going to reverse, which again, today is not a thing, but if we were trending, it would be a different conversation. If the market is going to get to a gap fill and then reverse and keep going, it will often happen at the high of the day, not at the closing price. So that's why I use the high of the day or low of the day with a gap down. Good morning to Pavel. Welcome. Willie T in the house. Good morning to you. We got 3 minutes till the markets opens. Let's just quickly take a look at the NQ. I have a feeling it's doing exactly the same thing as the ES, but let's figure out what the levels are to watch. Yep, exact same thing as the ES. Okay. So everything I said this morning about the ES, it's the same with the NQ, but I would call their balance area high. A little bit lower than that. Yeah. I would call this their balance area right here. So the balance area high is going to be around somewhere around 2150. 20,150. Okay. So again, very large gap. Large gaps often don't fill the first day. So the odds are when you try to push down to fill the gap, you will find support somewhere and turn around and keep going to the upside. Where is that level? Going to be somewhere around this balance area high. I can see there's a very large node from the overnight at 20,113. So that's your area to look for support. Basically between 20,113 and 20,150 this morning. If they find support for all the same reasons I talked about on the ES, they are likely to continue higher. The first target will be either the overnight high, or if we start moving higher this morning and then turn around, whatever the high of the day is at that time is the target to the upside for a day trade. And a failure to find support around 20,117 looks for a move back to Friday's high around 19,970. Okay. So yeah, the two markets are perfectly in sync. And I'm telling you, this is a delicious morning. The opportunities are fresh. So when that opening bell rings in 1 minute, we're asking ourselves two questions. Do we have a gap and go? Meaning, are they just trying to go this morning? Keep going straight up. Or are we trying to fill the gap? If they are trying to fill the gap, where do they find support? Because there's a less probability they will fill the gap. We are not obsessing over the gap fill right away. We are obsessing over where do buyers defend? Where does the market find support? Because that will set us up for what will happen the rest of the day. And the market is open. As always, when it comes to icebergs, if I see multiple icebergs sitting here like this, I assume the market will come back for them. Okay. Now they can disappear at any moment. They can just turn them off. But if the market starts to sell off this morning, and these icebergs stay up here, there's one at 57.85 and one at 57.90, then that will further increase the odds in my mind that we will find support and come back through the opening price. So that is actually bullish to see, even if we start going down. Going downtown. And of course, the one catch to using the icebergs is they can disappear. So they only remain a target if they stay there for the next 20 minutes or so. Any other questions from the chat? Everybody's just so excited. They're just like, man, what a great morning. Gonna make some money. We got a question here from Doesman in the Discord. He says, if price comes to the balance area high, what kind of behavior would you look for to get your bias besides price holding below or above a balance area high? Well, the short answer is it's the market holding above or below the balance area high. Now, the tricky part is that it will chop, right? It's not going to come down here and just be like, boop, and then run away instantly. It's not going to do that. It's going to come down here and it's going to grind and grind and grind. And it's going to start to look like it's breaking lower. And everybody's going to be like, oh my God, I got a short. And then it's going to boop. It's going to pop back up. And then it's going to grind and grind and grind. And it's going to look like it's going higher. And then it's going to boop, come back down again. And they're going to do that probably a few times around 55. They're going to just keep trying to get people to short the lows, keep trying to get people to long the highs and kind of grind there. Again, I don't have a crystal ball. I can't predict how long. It might be 2 minutes. It might be 2 hours that it grinds there. I really don't know, but it'll do some grinding. And so I'm just asking myself the question over and over and over again the whole time while it grinds, what's happening? Is this support? Is this resistance? Is the market going to break lower? Is the market going to break higher? And at some point I just decide, right? Based on what my brain signals are telling me in that moment. And then I get in the trade. The nice thing about the trade is I can get stopped out very quickly, right? If the trade is going to go, if the support is not going to hold and the market is going to go lower, I can get in with a nice tight stop. If the market is going to hold support and go higher, I can get in with a nice tight stop. And the potential rewards on both sides are very big. So it's going to be about patience in waiting to pull the trigger to enter the trade. But the signal is very simple. Are they getting support? Then you want to be getting long. Are they getting resistance? Then you want to be getting short. And you have to emotionally accept the chop. Emotionally accept that they will probably grind for a while there. Okay. So the market is opening. We're coming back up for these icebergs right away. I believe this is the market wanting to get above the overnight high at 57.90 and try to get some people long there. I would not be overly bullish for a gap and go yet. If we start to get new buying above the overnight high, then you want to get bullish for sure because you don't want to have to chase price. But my guess is that look above will fail to come back to try to fill the gap. As I said, I think the first move this morning will be a fake out. These are really important days where potentially the momentum of a market is changing. All the way up into last week, people didn't really know, this was all just balance. Is the market going to break lower or is the market going to reverse and head back up? This morning's gap up is their first signal it's going to go up. So everybody wants to trade this morning. Everybody wants to get in a position. First thing. And some are going to be thinking this thing is going to crash and burn and they're going to be shorting. And some are going to be thinking this thing is going straight to the moon and they're going to be longing. And so the market's going to give them a chance to get their liquidity filled. And that is probably with a fake out or two. The market is rarely kind to either side. It's very rare that the market is going to open with a gap up, immediately get gap and go, immediately get above the overnight high and find support and just go straight up because you're then making it super easy on everyone who traded over the weekend. You're making it super easy on all the buyers who bought this morning. It's like the market doesn't do that. It doesn't make it super easy for everyone. It always squeezes a bunch of people, then it does what it's going to do. So that's just food for thought. Some says, how much money did you make last month from trading? None of your business, some. Cheeky. That's so funny. How much money did you make? None of your business. How much money did you make? Street Salsa says very narrow opening range so far. Yeah, I mean, we're 7 minutes into the day. Seven minutes into the day, we've already done a 10-point range. That's pretty good. Okay, so we're at the overnight high right now. We've got this iceberg. So now we're watching to see what happens. Does this iceberg disappear? There it goes. It disappeared. And now do we turn the overnight high into support? Do we start to bring in more buyers up here above 90? I do not think we will. I think it's going to reverse and come right back down through the opening price. But if we start to get buyers up here, we want to get bullish real quick. So let's see what happens. Stephen in the Discord says, how did you find Friday? It was so slow. Curious if your insights of what happened there. Yes, it was OPEX, quarterly OPEX. Always like that. Yeah. So what I said on Friday morning was it's probably going to be a choppy sideways day today. But that I'm always cautious when I make that guess. Because most of the time when you have a lot of options expiring, you have a choppy sideways day for the market. Like that's just normally what happens. But I swear to God, every time I say it, every time I'm like, well, we got a bunch of options expiring today, so we're going to go nowhere. That's the day it makes a 100-point move. That's the day where it makes some big trend. So I'm always very cautious. But yes, that was what I was looking for on Friday. And we had figured it out by about 2 hours in. But as I said, to me, what's more interesting than what happened Friday is what happened in the weekend. The way this market made its move higher is more natural. It is more just regular, more traders buying the market, pushing it higher. So that to me tells me the pin is probably over, which increases the odds we will break out of balance today, that we will have a bullish day. Okay, so we are getting new buying above the overnight high, which is bullish, but I personally will not buy it here because I feel like the market is overly long. This is that scenario I talked about with they don't make it easy for the market. They don't say just buy the opening price on a gap up and we're instantly going to take the market way higher for you. You know what I mean? That's just not how markets work these days. They always get as many people long as they can first, then they reverse. So I recognize I might miss the good opportunity to go long. Buying the overnight high right now it might end up being the best entry you can get, but it's not worth the risk in my mind. Okay. So I think we're still going to get resistance up here around 58.04 and then come back down through the opening price. If not, I will have to just admit I'm chasing a little bit. But I would rather chase and make less profits on the long side than go long and get stopped out and lose money. So I'm calling for a little more caution here. This is also a great place for a change in the market, meaning something just randomly changes. Right? The momentum has been up so far this morning. So that momentum shifting would bring the market back down. So I'm closely watching Bookmap and the large liquidity nodes. So the areas where you see the dark orange and yellow, and I'm looking for something to suddenly change. If these start to get lighter and lighter and lighter, and all of a sudden we start to see darker levels popping up below, that's a sign the market's getting ready to roll over and come back through the open. Okay. Do 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 do. Any other questions from the chat? Good morning to Arjit. Welcome. Laura in the house. Good to see you. River Rock says the market is waiting for PMI. Does that come out in a minute? DNK is here. DNK says, where would you put the sell order to get into the trade for the look above and fail? If I was doing it as a stop sell, it would be a tick below the opening price. So the idea is if they're going to turn the overnight high into support, okay, and they're going to keep going higher today, they should not come back through the opening price. There's an expression that Jim Dalton uses, which is all the screens turn red. From the opening price, anyone who is using a stock scanner, if the stock is above whatever it was at the open, it's green. It's shown as green inside the scanner. If it's below the opening price, it's shown as red. So when the ES passes through its opening price, tons of stocks all across the stock market turn red, and it changes people's minds. So if I wanted to be a bull, I'd be buying the overnight high for support with a stop below the opening price, which, as I said, I don't trust yet. So I'm not willing to do that trade. And if I was a bear, I'd be just putting a stop sell right below that opening price, so that if the market tries to turn it into support and it fails, I'm getting short there for what will probably be a larger pullback. Okay. So we're starting to get signals. They're starting to disappear some of the liquidity above. All right. A lot of times liquidity acts as a magnet that pushes price away. So what will happen is if somebody sees a large node of liquidity, they'll short and they'll use that as their stop. And it looks like that's all this was just a little poke up to take out those stops. You know, they got 300 stops from one person up here. So that, again, tells me not to buy this yet. That we're probably just going to get one more little poke and then the flush. So I would describe myself as bullish as a scalper, but not a day trader. Not yet. Good morning to Nap and Nor Auto Trading. Welcome, welcome. Jay says U.S. S&P manufacturing PMI flash actual 49.8. It was forecast to be 51.7. Oh no! Is that good or bad? Not really sure I even know. John H. in the house. Hi, y'all. Okay, moment of truth for the bulls. Was this all just a giant fake out? Did they just get up here above the overnight high to convince everyone to go long so that they could wipe them back out when they come through the opening price? Or is this real new buying and this market is actually bullish and we actually have a gap and go and we're going to go straight to the moon? We'll find out right now. Does it reverse or does the momentum continue? More new buying at the high. The thing that I'm expecting to see here that I'm not getting is short covering. We're not getting that flush to the upside that squeezes everyone out. So I now think this is a real gap and go, true new buying, and the market is bullish for continuation to the upside. That being said, I do think we are going to get a pop and a reversal. I thought it was going to happen right here. Now I'm starting to feel like it's probably going to happen a little higher, up around 58.11. So I wouldn't chase along at the high. But if we come back down into the overnight again, it is much more likely to hold as support now because we have confirmed new buyers and new buyers and new buyers above. So to me now, a day trade buying support around the overnight high with a stop below the opening price is an acceptable trade. I see this as a gap and go. And it's just because there's relentless buying. They just keep buying and buying and buying and buying. And so there's buyers. If there's buyers here now, there'll be buyers here in 10 minutes and buyers here in an hour and buyers here in 2 hours. So that is bullish to see. Again, do not long the highs. Wait for a dip where you can get in risking way less. Getting in down here, you can just risk a tiny little bit looking for the move to continue. Whereas if you get in up here, you might instantly get a pullback and then you get wiped out. So wait for dips to buy. Don't buy the high. But as long as we stay above the opening price, this is a gap and go. This is bullish to see. Let's take a quick look at the NQ and see what that is doing. So yeah, exact same thing. Gap and go above the overnight high. The next large node that jumps out at me is around 2440 and then up around 2490. So that is the targets to the upside for the NQ today, as long as they can stay above their opening price, 2260. So again, you don't want to chase. You don't want to buy the high. You want to wait for a dip and buy support. But as long as they stay above the opening price, the higher probability is continuation higher as we have momentum. And so you say, Charles, where do you come up with this? Like, why are you feeling this way? 10 minutes ago, you thought they were going to flush, and now you're saying they're going to keep going up. What's the difference? Tempo. We have had multiple opportunities for the market to basically get a quick pop up and then reverse back down. And it hasn't done it. Every time we get the pop up, bots are just stepping in and buying and buying and buying, creating this slow melt to the upside. So that's what I think is going to keep going. Even if we get a dip, those bots will step in and the slow melt will continue. As long as we stay above the opening price. Everything flips bearish if we cross back through that open now. As far as targets to the upside for the ES, the first major target is 58.22. That is a poor high that needs to be repaired. There's some resistance just above that around, between 58.28 and 58.33. If we can get through that resistance, the next target to the upside is 58.55. So, again, just put these things in context. You get a dip, you go long, nice tight stop, you potentially get a much larger move. That's an asymmetric opportunity right there. Same thing if you get the move up to the VPOC, asymmetric opportunity. So it's okay to be patient and wait for a dip. You don't have to chase the high. So then you say to me, okay, Charles, I hear you. Intraday today, at this moment right now, it's bullish. and it's making a move to the upside. But we never came back to back test that balance area high. Isn't the market supposed to do that? Doesn't it normally come back and back test a balance area high before it makes a big move to the upside? The answer is yes, but that's not going to happen right away. Right now, intraday today, the momentum is up. If they're going to come back to test that balance area high, 5750 area, 5755 area, they will likely do it later on in the day with a liquidation that'll come down very, very quick. So intraday for now, the momentum is up. Okay, the market is creating a poor high. The market often pushes away from a poor high, but it slightly increases the odds that once it does, it will find support and come back through, continuing the momentum to the upside. Rando says the SPY is almost to the 200 day. Were we below the 200 day? Can't be. Oh man, way below. So yeah, no, as far as I read it, we're nowhere near that. If you're talking about a daily level. All right, guys. Well, unfortunately, I got to say goodbye. We've come to the end of the stream. Man, it came quick today. It was like you barely blink and the thing is over. So here's my advice for the rest of the day. Right now, the momentum is up and it is likely to keep going up. But look for a sign that that momentum has run out. Because once we run out of steam, and it might be around 58.25, once we run out of steam to the upside, we are set up to liquidate later on in the day. So that would look like the market kind of slowly works its way higher for the first few hours of the day, runs out of steam, starts to come back down, looks like it's going to go sideways, but then out of nowhere, just it starts to fall later on in the day. If that happens, that is not bearish, the liquidation, because that means they're coming back to back test to break out of balance. So when we look at this on the daily, when you have a balance area, such as this, you often come back to back test that before you continue higher. Okay? And so we haven't done the back test yet. We opened with a gap up and we're immediately getting a gap and go. So that back test is still needed. Obviously not right now because we have a gap and go and we have momentum and everybody's buying because everybody's so excited. So it's not going to happen right now, but 4 hours from now, well, that's when it could happen. Once everybody that's going to get long today has gotten long, that's when you get a liquidation. And don't let it get you too bearish. Thank you very much. With that, I will say goodbye. If you are a member of the brigade, head on over to the private stream. I will see you there in about 2 minutes. If you are not a member of the brigade, what the heck is stopping you? Just head to piratetraders.io/join. And we'd love to have you join the party. $20 a month, and you get my insights every single morning. Thanks a lot, everyone. Okay, bye. Please smash the thumbs up button. Thank you, bye. Don't forget I love you. Okay, thank you, bye. Goodbye to everyone in the Discord. Appreciate you.